Live. This is Bob Desmond, and what we're going to be talking about tonight are the opening futures actions. And the question is, there's a lot of buzz going around the Twitter sphere right now that we're at 2,000 top. Um, it's time for a crash. Uh, I'm going to tell you why I don't think so. Maybe I'm wrong, but I don't think that I am. I think what we're seeing is sector rotation. I spoke about it on Best Stock Charts over the weekend. It's posted here on YouTube. And also, we spoke about it on Thursday night that I expected more sector rotation. And we're going to talk about it tonight, but we're going to get more granular. We're going to talk about the charts, ratio charts, what were leaders are now laggards, what's picking up, what's breaking down. And we will, of course, do some stock chart requests, time allowing. And let me share my screen and let's go over the opening futures action. And of course, we will say hello to people before we begin. All right. Michael, welcome. Watch list. Watch list. SMCI, Taiwan Semi, Meta, ARM, AMT, DR. That's a home builder, right? DHR. Workday, very good company. That's an Investors Business Daily darling. AMT, I'm not familiar with. ARM, I'm familiar with. SMCI, boy, am I familiar with that one. NVIDIA, yeah. Good stuff. It's so hard to find you on YouTube search. Really? Honestly, it doesn't shock me. I don't have much luck with YouTube. I think I've said one too many non-compliant things relative to the woke culture that's at YouTube. Oh well, it's life. We're going to speak our minds no matter what. Hey, Jody, welcome. Franklin, welcome. Sean, welcome. Seymour Rivers, thank you for the audio check. Talon, I saw you sent over a couple of messages. I'm going to reply back. I have like 29 messages to return on Slack. Why does Warren Buffett want Oxy? Oxy has an angle on I read about it a while ago, over a year ago now. They have an angle on like renewable energies. I forget what it is, but they have an angle over there that Buffett apparently likes. So Warren likes it. I like it. Good evening, Bob. Jeff, welcome. SPY at top of ascending price channel. Yes, but it's been there. It's broken down below that ascending wedge, moved back up, new ascending wedge. So I don't argue with you, but it's like the Michael Myers of indexes right now. Talon. All right. Denny, nice top five. Thank you, sir. Thank you very much. Appreciate that. Okay, so let's get to it. We have the E-minis open. This is a 5-minute chart. And we have opened down on the session. I'm not surprised, given the fact that we closed pretty poorly on Friday. Yeah, I'll take you to a 30-minute chart for a moment just to backtrack and refresh everybody's minds. And we have a head and shoulders setup forming here. Here's your left side, right side. Here's your neckline. And it looks as though we're going to break this neckline. I don't mean that we're going to open down tomorrow. I think it's quite possible that we do. ESLL, lower low. Oh, God damn it. I drank way too much coffee today. At or below, ES, lower low. There we go. Good to go. Okay, so we'll see if that fires off. Let's move on to the Russell 2000. The Russell, I think this is a perfect example of sector rotation. You have the ES that is down spot 1-2%. Granted, it's very, very early, and I'm splitting hairs here. We're only 39 minutes into the new trading week, but this is becoming a trend. Wrong chart. And we're going to talk more about it. The rut is only down spot 2%, rallying off of its lows. Now, the mid caps, I really like the mid caps quite a bit. The mid caps are down spot 6%. We're going to be talking about the mid caps later on. I want to know if we break out on the mid caps. I want to know if we break out on the small caps. And the Dow has been performing very, very well. New all-time record highs last week. Again, we moved higher on the week. We closed higher. The key to remember is that when you take a look at a weekly chart of these names, not so much the Dow being overbought relative to the Bollinger Bands. Bollinger Bands are in orange, I guess that is. But when you take a look at the ES, the S&P 500, it's kind of extended. Let's go to a daily chart. That's a better illustration. We're kind of extended relative to it's only a 2 standard deviation Bollinger Band. This is not extreme overbought levels. So I'm not here to do any Chicken Little stuff. But here is your upper band of your ascending wedge formation. And here is the lower band. And this can keep going on. You have a few more days before this needs to get resolved. If it gets resolved to the upside, I would be really cautious about the market, because usually when you get a breakout above the upper band of the uptrend channel on an ascending wedge, you can get a big move, 1, 2, 3 days. All of a sudden you retrace back down, and there's a very good chance you break support. You break the lower band of that ascending wedge formation. So that may be a little bit of a parabolic move. But as it stands right now, as we proceed into the new trading week, we are at the lower band of that rising ascending wedge formation. So, we could sit here and say, you know what, this could easily drop. Yeah, they could easily drop. But what are the probabilities? The probabilities are that momentum is going to continue to drive in the direction of the path of least resistance. What's the path of least resistance? Up. We could disagree with it. Stocks are expensive. Yeah. Economy sucks. Yeah. Inflation's hot. Yeah. All that matters is this is going up. Simple as that. Until all that other stuff matters. And then all of a sudden, then you get the doom and gloomers coming out. I choose not to do that yet. Back to the 5-minute chart. Looks like ES caught a bid here. We're off session lows. Did I go over NQ? I don't think I did. Here's the NQ. That was lower. It's since reversed off the lows of the session. So at best, what we have here is lethargic trade in the markets at the open here. I want to know if NQ breaks. Okay, so let's segue over and talk about the currency markets, yields. What are they doing? And I think we're going to begin with yields, because on Friday, The 10-year yield had a significant drop with bonds rallying. And yields are moving up at current, off session lows. Let's go to a longer term view here. Okay, not much happening. Back to the 5-minute chart. Let's take a look at the US dollar. The dollar is up at current, which I'm kind of surprised at. In a way, not really surprised. I'm a little bit surprised because the euro closed very, very strong, but the yen was kind of weak. So you're going to have a balancing act here. The one thing I will point out is that this is only a 5-minute chart, but you have a Bollinger Band squeeze setting up here. Note that you have, in gold, you have the Bollinger Bands. In white, you have the Keltner channels. I've been talking a lot about this lately because it matters. It's a squeeze. The question is, in which direction will the squeeze fire off, up or down? Rule of thumb, it's generally in the direction of the trend. So if the trend is up, the probability of resolution is to the upside and vice versa. So we have a squeeze setting up here. And what is the trend? We'll go to an hourly chart. You know, macro view, the trend is down with a bias to, oh, look at this. On a 1-hour view, we have a Bollinger Band squeeze firing off here. Mid caps just broke out. That was quick. That alert I just set up on the mid caps just fired off. They are now positive. Let's go back to the dollar because this is important. I think we may get a measurable move on the dollar very, very soon. Again, the question is in what direction? Now, we've been consolidating. Let's go to a daily view. The dollar's been under pressure. We're bouncing off of a lower band of support. I give odds to the bulls, but I'm not going to be surprised if it breaks down because when you take a look at the longer term view of the dollar, we've been trending lower on a monthly time frame, on a weekly time frame. So this could get resolved to the downside, but I think it's by a slim margin, odds favor bulls. Now, as a matter of fact, let's set up an alert here. In fact, higher level alert. Because this is going to matter when we decide whether or not we want to add to our gold mining trade, which we did on Friday. We sold some puts on NUGT. God damn. Lower low. Good. Good enough. Okay. Let's move on. Let's take a look at the precious metal names. Let's go with gold. All right, gold pulling back and had a really good week last week, pulling back slightly due to the fact probably you have a little bit of probably upward bias pressure on the dollar and yields are moving up a bit higher. So some of the froth coming off of gold. We're going to talk about gold from a higher level view, monthly view in a few minutes. So stick around. I'm really liking gold. But of course, the dollar needs to break before I got aggressively bullish on gold. And we're not there yet. Let's check out silver. Silver, wow, getting whacked by over a third of a percentage point. But I think all we're doing is giving back some of these gains. That's all. So I'm not too worried about silver. Moving on to the energy complex. Light sweet crude. I just saw it. Here it is. All right, so light sweet crude about flat on the session. It had a very strong 2 weeks prior to last week. Last week a little bit rough. And this takes some of the pressure off the market, inflationary concerns. Go to comments really quick here. A lot of people putting stuff up. Social media compliance are outsourced to unfriendly to U.S. countries. Jody, I don't take it personal. I think it's what they do is highly un-American, and I am red, white, and blue. I bleed it. So that's the way I'm going to go out. Carbon capture technology. Thank you. That's what they had. Yes, Oxy. Pete, hello. Morning to you. Where are you that it's morning out of curiosity? Thank you, though. Same to you. Bob, why don't you post other YouTube video top 5 picks so others who are not aware of it can watch it later? Well, I did post it, Franklin. I posted the freemium version and then the premium version in the members area. But if you have ideas, let me know. If you want to elaborate a little bit more, I'm more than willing to do other stuff. PCE price index on Thursday should be interesting. Hey, Randy, how you doing, man? Yeah. PCE is very, very important. We're going to be going to economic data in a minute. That's the Federal Reserve's favorite indicator for inflation. All right, so oil now just turned positive. Let's check out NG for a moment because we're long of NG now. Wow, nice. Bravo. Nat gas spiking up nearly 5%. Bravo. Let's see what this looks like. Bravo. Good stuff. So what we're looking to do here is let's go to a daily chart for a moment. We opened up a call spread right back here. This is a daily chart now, right here. And then we got this big bullish engulfing bar. For those that are not new, for those that are new to technical analysis, you don't know what that is. I have a 5-part video tutorial, my top 5 favorite candlestick patterns, link below. Take advantage of it. It's free. So this is an outside reversal bar, aka bullish engulfing, beautiful, fired off. What we're looking for here on Nat Gas is a higher low. And I would be open to extending out my trade if we are able to break out and above this upper band of resistance. That would mark a W formation, a higher low, and then a breakout to new higher highs. The question is, does the 20-period moving average here in blue travel lower than this pivot point? If it does, that's going to be a natural resistance levels. We're long of call options. We have a profit. We don't want that profit to slip away. I'll probably book profits into that 20-period moving average, and I'll watch and wait for a breakout above this pivot point. If we get it, we'll reestablish a new trade going out further in time and giving us more duration, and maybe even sell some puts here. So Natty Gas looking pretty good. Let's continue on with agriculture. Corn. Let's go to a weekly chart to get the vibe for how we closed out the week. Wow. Talk about deflationary. Holy God. Corn just annihilated. This is a bloodbath. Corn's going lower. Soybeans. It's up at current. It's going lower. Bearish key reversal bar on the week. Wheat prices are firming up here. This is a very similar candlestick as to what we saw on both soybeans and on corn. But what did we do last week on wheat? No new weekly lower low. And as I always like to say, is that the first thing you need to do when you're looking to buy a stock, commodity, ETF, whatever, you got to stop going down when it's in a bear market. And what we may have here on wheat is this. Let's illustrate. Let's take our crayon out and war game this. What we may be seeing is a higher low. And there's an ETF out there, WEAT, if you want to buy wheat on the, I think it's on the Amex stock exchange. Could be wrong about that. Doesn't really matter. Just WEAT. It doesn't matter where it trades. All right, so there's our lower low. And what we care about here is, do we break out to new higher highs? And this is a classic higher low W formation. And once we break above, you can see I already have the alert set up here. Once we break above this upper band of resistance, then it's game on to the long side for wheat, and you got to be long. So I'd be watching this as a possible reversal trade and perhaps the bottom in wheat. I'd also be watching soybeans, corn as well. Let's check out the agriculture ETF. What did it do last week? That's DBA. And it's up. It's been on fire. I got to take a look at what commodities are in here, because this is running completely counter to wheat, soybeans, and corn. So, Franklin, I know you know about this. If you know what the heaviest components are in the DBA, can you just share that with the rest of the group? I know cocoa is in Fuego, but I just don't know how much that makes up of that composite, or that an ETF, I should say, not a composite. All right, what else do we have here? What did I miss? Let's check back in with equities for a moment. All right, E-minis still down. Mid-caps did turn positive. Wow. Now they're up 0.17%. Mid-caps, bravo. This was one of our top 5 picks about 2 weeks ago, the MDY, the mid-cap sector, a mid-cap ETF. And let's go to a weekly chart. That's actually a monthly chart, but you could see here, massive, massive breakout on the mid-caps. Really beautiful stuff. Okay, so that is the open. Welcome to the new trading week. Hi, Bob. Did you see the Japan stock back to all-time highs? That's insane. Yeah, 35 years. Yeah, 30 years. 30 years. Yeah. Yeah, but the key is they need to keep the the yen down weak. That helps their exports. So it's good to see. Good to see. The market rallies broadening out. And heck, China may even find a bottom soon. Let's check out the FXI, how that closed out last week. FXI rallied. This may be a buy here. This is looking actually pretty good. FXI China large caps. Yes. Thank you. Hit the like button, subscribe. You know the deal. Let's go to the economic data coming out this week. Tomorrow, nada. New home sales, not a big deal. Durable goods coming out on Tuesday. That is a very, very important read on the economy. We're going to get consumer confidence. That comes out at 10 a.m. A lot of people forget about these 10 a.m. reports that come out. And sometimes the market starts off strong. All of a sudden, you get hit with a 10 a.m. report and you get a reversal, and vice versa. So just be aware. 10 a.m. consumer confidence comes out. Wednesday, GDP first revision. So they're expecting a 3.3% read. My guess is they're probably going to revise downward. And if they revise downward, yields go lower, bonds go higher, stocks go higher. Why? It gives the Federal Reserve a reason to say, all right, maybe we can't not give the markets what they want. That's a rate cut. Inventories, watch out for inventories. You don't want to see them grow too much. That means that retailers are going to have to cut prices. Thursday, initial jobless claims. We get that each week. And as Randy mentioned earlier, we get the PCE index. That is the measure of inflation at the consumer level, but it's the Federal Reserve. It's like the CPI, but it's the Federal Reserve's favored benchmark for inflation. And you can see here, wow, they're going to have a bunch of spin doctors out after that release. Something's happening here. Look at this. Bostic, Goolsbee, Mester, all these Fed heads coming out throughout the day and evening to put a spin on this. And you can bet your bottom dollar they already know what these numbers are. Friday, ISM manufacturing. We're still in contraction. Any read below 50 is a sign of contraction. I think that if we go above 50, the markets may bid on that, but it better not be too much, because that would mean that, you know what, the Federal Reserve, maybe they can't even entertain cutting rates. Consumer sentiment comes out. I think that's a revision. And more Fed heads coming out on Friday. I don't know why they need to speak, except for the fact that they need to be spin doctors for the Federal Reserve, trying to set expectations. Okay, so that is the week that's in front of us. And as we enter into the new trading week, folks, we're firmly above a 34 handle on the Shiller PE ratio for the S&P 500. The mean is at 17. And on a forward-looking basis, we're at about 20 PE ratio. So we are a bit pricey here in the markets. And it doesn't matter until, of course, it matters. So what might that look like? And what it will look like is that we go shooting up higher, and then one day you get a bearish reversal bar. That in all probability is going to mean correction time. We're not there yet. We haven't seen it yet. Therefore, path of least resistance remains higher. Federal Reserve's Fed watch tool, should say, Fed watch tool. No ease expected in March. We knew that. May is gone. No rate cut there. That's only at 15 points. This was at like 80, 90% at one point. Federal Reserve rate cut. In June, we're about the same as Friday, about 67% probability. July, pretty much unchanged from Friday. Probability of an ease, 85%. So the way that I'm operating here is that if you go back in history and you take a look at when the Federal Reserve initially cuts rates, stocks go down. This is not a debate. It's a fact. It's just what happens. History shows us that. So the question is why? Isn't that really good news? Not really. If the Federal Reserve is cutting rates, then there's something wrong they're responding to, and one rate cut's not going to do it. They're going to need multiple rate cuts, if not congressional intervention by spending money to help spike the economy. So right now, the way I view the fact that we don't have rate cut expectations until July, I think that gives us a runway for the markets to continue up higher into July. And the longer they kick it out, the more the markets can go higher, as long as the 10-year yield doesn't go front running the Federal Reserve. If the 10-year yield starts rising on its own, especially at a dramatic rate, then the equities are in trouble, big, big trouble. And so any talk about small caps or high-tech beta, you're going to want to avoid, right? It's just, you don't want to go there. But right now, yields pulled back on Friday measurably. Expectations are there's no Fed rate hikes coming, and the markets are satisfied with that. Are the triple Q names extended? Yes. We're going to go to the market participation in a moment. I don't want to get ahead of myself. We'll talk about that more. So let's talk a bit about earnings coming out this week. And this is the back half of earnings season. And what reports now? Just like last week, mid cap, small cap. And you still have some large cap names coming out here, but mid caps coming out on Monday, Zoom, Workday, iRobot. That's going to be an interesting one. That's trading like it's going out of business. Lots of debt. That deal with Amazon was blown up by the FTC. Tuesday, Norwegian Cruise Lines, AutoZone, Lowe's, Cracker Barrel. I'm surprised they're still in business. I love Cracker Barrel. That's why I first ate my first grits, Cracker Barrel. Macy's, Devon Energy. We got an energy stock, solar stock, after hours on Tuesday. Beyond Meat. Oh my God. Lemonade, Splunk. So all these mid-cap, small-cap names. Baidu, Advanced Auto Parts, Snowflake, Marathon. That's an energy play. Salesforce.com. That's the Pimp Mac Daddy of the week. Everybody's going to want to pay attention to Salesforce. It's trading relatively cheap at current. C3 AI, Celsius. That's a good-looking chart. I went over that a couple of days ago. Best Buy comes out. Birkenstock, Ambev, Dell, Soundhound, Hewlett Packard. I haven't thought about them in months. Tidewater. Tidewater. That's one of our top stocks for the new trading week. Tidewater. That is a energy play, but very, very strong fundamentals, very, very strong technicals. So that's earnings coming up for this week. And again, we're more biased towards the mid caps at this point. And I also like the large cap bank names. To a certain extent, the small caps, they haven't really shown the oomph yet to break out like the mid caps have. So let's continue on and talk a little bit about sector rotation. Let's talk about what's going on here. Oh, before I go on, Amazon joins the Dow tomorrow. That's one of my top 5 favorite candlestick patterns. I forgot about this. So I'm hoping that this is not going to be the death knell for Amazon. I mean, Walgreens Boots, who they are replacing as Walgreens drugstores, they were only put in 2018. They're being taken out. They lost about 2/3 of their value. Okay, so this is the chit chat you're seeing a lot of on Twitter, and I take it with a grain of salt. Okay, yields are going up. I remember I was trading the dot-com bubble. I remember very, very clearly. Yields were going up, and we're not in that environment right now. We're not in that regime. So this can continue up higher, and equities were a lot more expensive back then than what they are right now. Significantly more expensive. Now, they're doing comparisons about the NASDAQ being a bubble at current. All right, maybe. I don't think it is. I don't think it is. I think that you have participation in the NASDAQ breaking down. You have, at current, to put things into perspective, you have the NASDAQ and the triple Qs that are about equal on the year so far, trading just shy of a 7% handle year to date. Now, you take a look at big names that are in the Mag 7 basket. You have Microsoft. That's up 9%, outperforming. Meta up nearly 37%, outperforming. You have NVIDIA up 59%, outperforming. Broadcom, not one of the Mag 7, but that's up 16%. Amazon up 15%. But you're seeing divergences here. Google underperforming, not just the triple Qs, but the S&P 500. Apple dramatically underperforming. This is the second largest name in the triple Q basket, just behind Microsoft. Tesla is down nearly 23% on the year. I've been saying, avoid this name. Love Elon Musk, but I hate the EV market. I just hate that. I don't think that the EV market is a sustainable business. We don't have the infrastructure. They're reliant upon government rebates, and a lot of people don't qualify. And the used car prices for Teslas are dropping through the floor. So where's the pricing power? I'm never going to try to outguess Elon Musk. He's far smarter than I'll ever hope to be. But the share price is not lying right now. So Tesla underperforming. So what you're seeing here is are high quality names that are correcting themselves. When you're in a bubble, usually you have everything going up, and then you have the dash for trash, meaning all your junk stocks, your AMCs, your GameStops, they start ripping through the ceiling because why? They're cheap on dollar terms. People are going to buy whatever they can afford. They see a stock for $1. All right, I'm going to buy that because that's all the money they have. Right. So they're going to buy that stock. They don't care about the fundamentals. They just care that it's moving and it's on Wall Street bets. Simple as that. So I don't view this as a bubble. I think that you have strong stocks that are up for a reason. Look at NVIDIA's earnings. 75% margins on a semiconductor name. That's insanity. You see 75% margins on software stocks, not on semiconductor stocks. They have high margins, but 75%, that's mind-blowing. Mind-blowing. So moving on. So let's take a look at names like Tesla relative to the S&P 500 ratio chart. Tesla versus S&P 500, down 2.82% on the year on a relative basis. That can't be right. Sorry, that's not on the year. That was on the day. I couldn't be right. On the year, down. Yeah, that's right. Okay, nearly 28% on a relative basis. S&P 500 up, Tesla down. So the variance being nearly 28%. Bananas. Taking a look, and this is getting weaker. You go back. Oh, damn it. You go back to the daily chart for a moment, and you can just look at this chart and you say, okay, is Tesla gaining strength versus the S&P 500 now after being down in excess of 20% on the year? No, it's getting weaker. It's getting weaker. And here's a stock that only a couple of days ago was looking pretty good on a daily basis. I didn't trade it because I didn't like the weekly chart. And here it is on a daily time frame. This should have broken out. It didn't. Maybe it will tomorrow. But this should have broken out. It didn't. Laggard. So are we in a bubble? I don't think we are. I think that you have good stocks that are declining for a reason. Their businesses are in a little bit of trouble. They're in change. They're morphing into something else now. As a matter of fact, Tesla's putting out Tesla houses now. Looks pretty cool. All right, so looking at indexes, S&P 500 versus the Qs. Now we're looking for sector rotation. What's going on here? The Qs were the leaders, but on the year right now, they're about on par. For years now, the S&P 500, well, you had a brief blip here where the S&P outperformed, but by and large, the Qs have outperformed the S&P 500. Now, so far this year, they're on about parity. Monthly chart, S&P 500 outperforming the triple Qs on the month, forming a nice base on a weekly view. Getting stronger, beautiful base. Look at momentum on the S&P 500 relative to the Qs building. It's getting ready for a move up higher, or both are going to go down. The Qs just more so than the S&P 500. It's a ratio chart. So this doesn't mean that the S&P 500 is going to go skyrocketing up higher. They could both go down. One's just going to do worse than the other, and you still keep the ratio. Now, looking at sectors, let's talk about sectors now. So we know that the S&P 500 is stronger than the triple Qs of late. So what's stronger than the S&P 500? Because that's where we want to put our money. Right? We know the S&P 500 is kind of extended. We know it's expensive, but what's emerging? Banks. I've been talking a lot about the banks lately. On the week last week, the S&P 500 was down relative to the banks. The banks outperformed. On the month, I haven't looked at this yet. The S&P is still outperforming the banks on the month, but this is an improving story. On the day, S&P 500 underperformed the banks by nearly a half percentage point. That's a lot. So I think that we have opportunity here in the banks. And as I mentioned on best stock charts for the new trading week, Goldman Sachs, I like quite a bit. FCNCA, nobody's heard of that stock. It's First Citizens Bank. It's an investor's business daily darling. They're not optionable. It's like a $1,500 stock, but a great company getting ready to break out. Bank of America, another one looking really good. I prefer Goldman Sachs over Bank of America. If you want to go over those charts, I already did it. I'm not going to do it now. Go to Best Stock Charts for the new trading week on YouTube. Check it out. All right, so what else is outperforming here? This is posted by JC Parents, and this is actually a pretty good chart. And it's indicative of as to why the small caps are being hindered from breaking out at current. So what he did here is that he went into the Russell 2000 and he said, okay, I'm going to break out the small cap tech sector. And I'm going to create a ratio chart, which is just what we did with the Qs versus S&P 500. And you could see that the small cap tech is breaking down. So it's holding back the small caps. But as this morphs and gets more and more oversold, I think that the regional banks and the biotechs, regional banks have kind of stopped going down. They're basing, and the biotechs are beginning to move up and beginning to outperform. In fact, let's do a ratio chart of, I'm just going to use LABU. Don't pay attention to the percentages. Just look at the chart. This is a leveraged product. So S&P 500, again, don't pay too much attention to the percentage because it's a leveraged product. But you can see S&P 500 underperforming biotechs. And there are a lot of biotechs in the small caps. So as this sell-off in the small cap tech names gets resolved, I think the small cap names can move up higher. Therefore, more sector rotation. Now, the other reason why I'm not all that bearish on the market, and I watch this all the time, is the yield curve. The yield curve is inverted. It's not steepening anymore. It was steepening. Now it's breaking down. It's rolling over. I worry about the yield curve when it steepens, not when it's inverting. So until such time as we break out and above these prior highs, I think it's game on for equities. Yields moving lower, promises of rate cuts sometime down the road, no threat of a rate hike. It's a presidential election year. What are we going to sell stocks for? It doesn't make sense. Look for sector rotation. Now, I prefer, besides the banks, besides biotechs, if I had to choose between mid caps or small caps, hands down mid caps. Because keep in mind, what happens is when you get your best of breed small caps, what do? They graduate out of the small cap index and they go into the mid cap index. And so they start from scratch all over again. So the mid caps, I think there's a lot more potential outperformance relative to the small caps. Now, the mid caps are doing really well, and versus the S&P 500, let's bring it up. Let's just run the chart, ratio chart. You have the mid caps that are vastly outperforming the S&P 500, vastly outperforming, at least on a daily time frame. On a weekly time frame, clearly outperforming, and they're going up higher. This is going up. Monthly chart. There's nothing not to like here. So if I had to put my nickel down on what I'm going to buy, small caps, mid caps, large caps, I'm going mid cap all the way. No doubt about it. As for the Dow Transports, I want everybody to pay attention this coming week to durable goods and inventories. Durable goods and inventories, because there's something happening here. And I spoke about the reindustrialization of the United States about 6 months ago. I put a video out on YouTube, and it's really beginning to I think, come to fruition, because look at this chart of the Dow transports. I mean, this is a beautiful, beautiful base. I mean, if you change this to a monthly chart, I'll bet you, yeah. Let's take our crayon out here. Look at this. Beautiful. Little cup, little handle. What's not to like? All we need is a breakout of a massive multi-year consolidation. And the longer the consolidation, the greater the validation of any breakout or breakdown for that matter. But it looks as though this wants to get resolved to the upside. And when you want to take a look at the names that are driving this sector up higher, take a look at names like the CNX. What is this? Hold on. I just had the chart up. Railroad. Here we go. Take a look at the railroads. This is a daily chart. Take a look at the railroads. Ripping. They're in fuego. Nobody's talking about them. Weekly view. At resistance, they want to go up. We're very close to new all-time highs on the Dow Jones railroad sector. Do I want to be long of the railroads, or do I want to be long of the triple Qs? Ratio chart. The railroads are vastly outperforming the triple Qs. I want my money there. Another way of looking at what's going on in the economy, and this ultimately could prove to be a negative for the equity markets down the road, because this is, you ever hear the phrase, good news is bad news is good news on Wall Street. So what you're seeing here, and I spoke about this a few weeks ago, that we had broken out. This is the Dow Jones U.S. Containers and Packaging Index. We broke out back here in December, consolidating retest, bullish key reversal bar. The month is almost over. It looks as though this is going to break out. So you have, it all makes sense. Containers and packaging breaking out, railroads, transports getting ready to break out to new all-time highs. So again, this is the theme for sector rotation. I would avoid looking at the already extended. This should certainly be part of your portfolio. I'm not saying sell them. Semiconductors, high tech, they've run. They need a correction. They need to come in. But these names are just beginning to run. Gold. So gold is in a stealth rally, which nobody's talking about. It's had a threatened breakout for like the past 6 weeks. You know, over the duration of the past 6 weeks, it's broken out, failed, and people just got bored with it. We keep watching because we own it. So this is a quarterly log chart. I can never say the word. I'll never be able to say the word logarithmic. I still can't say it. We've broken out here quarterly time frame on gold. So we broke out last quarter. This quarter retest. This is getting ready for a follow through. What must happen here? What must happen is a drop in the US dollar. What must also happen is, not must happen. What will precipitate this is if the manufacturing base begins to expand. If you get next week the manufacturing PMI come out and it goes above 50, this is probably going to take off, because that's going to spark or stoke the flames of inflation. And you may be thinking, well, won't yields go up as well? Yeah, they could quite very well go up. And equities could go down. for a while anyway. But if you go back to a chart of the 1970s, 1980s of the gold great bull run, gold and yields went like this. What didn't participate in that rally? The US dollar, because it was going like this. You got to have a broken US dollar. Then gold could rip. So here's gold. Monthly chart, consolidating nice. Let's go to that quarterly chart. I think I am on a log chart. Let me confirm that. Oh, yeah, this is it. Same exact chart. This is getting ready to burst. Beautiful chart. Absolutely beautiful. And what I also wanted to point out here on gold was that we've been doing a lot of chatter lately about Bollinger Band squeezes. And you take a look at gold on a daily chart, you have your Bollinger Bands within the Keltner channels. That's a Bollinger Band squeeze. This is going to get resolved to the upside, in my own humble opinion. Monthly chart. Bollinger Band squeeze on a monthly chart. This is getting ready to rip. So I'm probably going to be buying more gold into the new trading week. Okay, let's do some chart requests here. We have about 8 minutes left. Sean, Zim, you got it. We have a couple of requests for Palo Alto Networks. I think I saw I think it was Town that sent me the message on why PANW was not in top 5 stocks. I like Palo Alto Networks quite a bit. Love the company, but when these companies report bad earnings, they kind of act lethargically. Now, I like Palo Alto Networks as a sell put spreads, and just trade options to generate cash flow. And I would trade it to the long side. Selling puts is a bullish bet. But to make big capital, big returns, I'm looking for stocks that are getting ready to break out to new all-time highs. That's what I'm interested in right now. So Zim, that's a good company, Zim. PANW. Trader Isaac. GDXU. Is that the gold mining? I know GDM is gold mining index. GDXU. Oh yeah. Well, so the caution here is that remember that gold mining stocks are equities. You got to separate the equity from the commodity. If the market goes into a correction, you'll probably see a little bit of weakness on gold, unless, of course, it's a geopolitical event that causes the correction and gold will go up as a safe haven play. But let's assume that it's not. Let's assume stocks go into a correction for whatever reason. Fears of a Federal Reserve rate hike. All right. Equities will drop, but so will the gold mining stocks, even if gold goes up. So I'm not as bullish on the gold mining stocks as I am on gold. I think that right now you're seeing gold stocks very, very cheap historically. I think that they could be bought. Hell, I sold puts on NUGT on Friday, and they were very, very close to the money puts. So if I'm doing that, I'm pretty bullish on them. I'm willing to take some risk. I do want to get a discount by selling puts. And if they're assigned to me, okay, I got a discount. So that's what Warren Buffett does. So all things being equal, should there be a correlation between gold and gold mining stocks? Yes, but not always. So just be careful. You put in a new, what is this, a monthly chart, new monthly lower low on this sector. It's a leverage product. Let's check out the GDM. This is an all-in view of the gold mining stocks, both the small players and the big players. And this is really what you want to focus on. And it's doing a whole lot of nothing. It's just basing. But I will say this. That you have a very, very tight consolidation going on here and a Bollinger Band squeeze setting off. But the problem is that you don't know what direction it's going to fire off in, up or down. Now, normally it goes in the direction of the trend, and unfortunately, that direction of the trend is down, and Stokes are very weak. So I'm not enamored with the gold mining stocks all too much to get overweight. Will I nibble here and there? Sure, I'll nibble here and there, as long as the premiums are nice. We could sell puts. All right, so that's my take. Let's go to Zim. Go to I haven't looked at this one in a while. Wow, this got taken to the woodshed, huh? All right, so it stopped going down. You're at a base here. I want to check out the short interest. Oh, wow. So you have the potential here for a major, major short covering rally. You have nearly 26 million shares that are held short with a 3-month average daily volume of just over 8 million shares. So you have several days worth of short covering in there. I like that quite a bit. Lots of debt, though. This is not an investment to me, but I do like it as a short covering play. Let's go to a daily view of Zim. Let's see whether or not we got a squeeze setting up here at all. That's the monthly chart, daily view. No squeeze setup. I do like the chart, though, on a daily time frame. So let's finish off with the monthly chart. I'm getting too ahead of myself. We're basing here on Zim. Shorts are asleep at the wheel. We're putting in higher lows. And we broke out. We broke out the week of the 12th, retested last week. Zim is a buy. I like this. Tight stop right below the lows of the week of the 12th, which is at 1163 per share, daily view. You have a bit of overhead supply here. You got to get through. I'd be a buyer on a breakout on Zim. And we'll keep this active for folks. I'm using Trend Spider. 35% discount code below. Great alert functionality here. All right, so that alert is set. Set it and forget it. Wait for the breakout, and I'd be a buyer of Zim. That breakout points at around 12. Let's call it $13 a share to play it safe. But on a closing basis, I would wait for that 3:30 time frame. If it's up above, what did I say, $13 a share? Even at noon, I wouldn't buy it. I'd wait to make sure that it closes above that mark, then they don't sell into it. So Zim, I happen to like. The catalyst being a short covering rally. After that, I would get out. Let's go to PANW. All right, so PANW, the street did not like their earnings report. You have an outside reversal bar on PANW. Maybe they'll manage to rally here to recapture some of these losses. But if they close out the month with this candlestick, this is an outside reversal bar. It's very, very bearish, and we could see lower lows. So I would not get aggressively long here, not yet. Weekly view, that was just last week that they reported. They smashed through a lot of support levels in one day. You can see how each day they bounce back to recapture a volume shelf. But you can look at it, this is a dead cat bounce. For right now, I think I would play it as a deep out of the money put spread, maybe even an iron condor, sell a deep out of the money call option, deep out of the money put option, put some wings on it or some insurance policy, and just generate cash flow. I wouldn't buy it here because, again, if we close at where we are now or lower on the month, it's probably going lower in March. So just be careful with PANW. As a matter of fact, let's check out the seasonality of PANW. 12 years worth of data. February is typically their best month, one of their best months, equivalent to January. March is historically, March and April are not good months for PANW. So just understand you're going into a period of seasonal weakness for PANW stock. And that's it, folks. Everybody have an awesome, awesome Sunday night. Thanks for being here. Like, subscribe. You know the deal. And have a profitable trading week. I'll talk to you soon. Be well.